Good morning. Happy Thanksgiving. This is Ken of Tortoise Capital with a review of the weekend trading reports for November 30th, 2019. Market still is in bullish quiet, favoring the long side in the swings. Everything in the look back periods are strongly overbought, with the exception of the 3 day look back, as a small pullback on Friday. Green bullish in the stretch stat, price relative to the 200. Strong ADX, strong trend to the upside. Very quiet volatility. Risk Z's favoring the risk on conditions, with 0.22 where it has stabilized and looks like it's ready to go higher. So you have a low, a higher low, another low, and it's never even dipped into the red, so that's really favorable until proven otherwise. These are the holdings for December for blended monthly rebalancing, and the leaders in the basic different portfolios. And the ETF2 theoretical exposures at 90%. Only Latin America is below its 4 month moving average. I should note that the TC2000 bundles have been very popular, and the $2,000 sale on them is over this Thanksgiving weekend. Thank you for all your support and interest. You get it at kl-bundle.com for details. Monthly market health check, a decisive move up to all-time highs. It reached the 315 that we projected before. That was the previous Z3 excursion from the last peak, and the last peak was a Z3 here. So there's that tells you when an exceptional move has been made, in my view. So this breakout this month has been something else. It was 6 weeks in a row, a pause, and then continuation. PSAR is still fairly young in the upward move. Z lines are expanding. We are summer, fall, summer, so that's all systems go. On the daily, any breakout above 315, instantly owning it. Dragon is marking the north shore of the river. PSAR is steady and strong up. 10-day low and the fair value are at 308. That's sort of your default swing position stop. The 90 is up. The 90 is above the 270. That's very favorable on 2 frames higher. That's a decisive move up on the long term. On the daily, we are summer, fall, right on the verge of getting back into summer, so the next leg up is still available. Quick look at the blended monthly rebalancing portfolios. Latin America and emerging markets suffered. Small caps, decisive. That's a trader's speculation to the upside being locked in. On the ETF 32 portfolio, looking at technology, small caps, consumer discretionary, and real estate. Real estate, I still think, is still a great play. It's been underperforming after a long period of gains when it was great in the defensive play during the times when the market was choppy, but has underperformed as money has rotated back into the growth side. But this is sort of a hedge to me. That I think excess gains are being rolled into real estate. Looks pretty good to me. Energy, commodities, China, Latin America suffered this week. Brazil suffered this week too. In the Dow 30, big winners: Apple, IBM, Visa, Merck. In the ETFs, biotechs, and software for potential momentum. I mean, how do you not love biotechs right there? It's a killer. ETF Max. Mm, Palladium semis for technology, and then I think, yeah, technology, biotechs. So only Latin America is suffering right now, otherwise 9 out of 10. Give us a 90-10 allocation mix. Technology and finance, energy suffering. Even healthcare is coming back now. That's that Merck, Pfizer, Johnson and Johnson, United Health dominating. Equities crushing all the alternatives right now with the market all-time highs. You don't need me to tell you that, but sometimes you need to see it. U.S. long and strong. ETF2, emerging strength here in biotech, being green and white and green and yellow. Regional banks, technology, healthcare, all good. Shifting to the dailies. Emerging markets, if there's any sign of weakness, and if this were to collapse, emerging markets, therefore, is the place you go, and also Latin America. Home Depot is still a value play to me right now. I like the energy sector as tactical value hunting. Lots of dojis on Friday, not surprising with the holidays. And plenty to choose from in here. Walgreens, Home Depot, Chevron, and Boeing. Energy, emerging markets. Here's that channeling and overreaction here in emerging markets. Um, Brazil's probably worth a look since it had been underperforming along with Latin America. It's stronger than the region, um, but actually turned in a strong day. So that maybe we'll look at that one on the speed run for the subscribers. Disney, United Health, and Healthcare leading the way up. Plenty of uh, range compression here in this bull volatile, leading to compressed pinch boxes and then the super pinch candidates. So the way I'm reading this now, I'm just going to keep like a 3-day running total of super pinches. And the first day that it comes in, I'm going to mark it as green. So EFA here. Otherwise, these other ones have been in super pinch for quite a while. So when I see Walmart, Mexico, emerging markets, that could be just a great breakout in either direction with emerging markets since it's already on a channeling and overreaction. But that's how I'm going to use this right now. I think it's important when things enter and then also when they exit. So that first day out turns out to be the start of something good. Auto framer, lots to choose from. Home Depot, Walmart, Walgreens. Nice. Green green candidates are the deep value plays, the most ATRs below their long-term fair value. McDonald's, Traveler still in great shape. There's Home Depot at 5 ATRs below. And then in the red, these are the relative strength leaders. Lots of daily squeezes because of the volatility.